Welcome back, traders. Today's lecture will be going over market patterns. You can use these patterns as a strategy to trade the market, or you can use them in confluence with the perfect entry strategy to add setups to that strategy in order to find good trades as well. I don't trade patterns that often, but these patterns reprint themselves over and over in the market. Once you know how to recognize them and you know how to trade them, then they add a perfect complement to any strategy that you have, or you can use them as a standalone strategy, and they work well that way as well. So I already have these patterns marked off, so they'll be easy for me to find and show you in this video. So we'll get straight into it. The first pattern right now that I have marked on the screen is a head and shoulders pattern, and how you recognize that. You have a level of support here. The market rallied up to resistance, fell back down to a support level, rallied up to a resistance, broke all the way down to support, rallied up to a resistance again, and broke all the way down to a support level again here before the market broke down and eventually, went down into a nice sell here. So how you recognize this pattern here would be left shoulder. This rally to the top, this resistance area will be the head. Once the market pulled back down to this support, came back up to this resistance area, it formed the right shoulder. Then the market found support again. Then the market came over to the right, finally broke support. The market pulled back for your retest of this previous level here. And then the market gave you a nice sell to the downside. The key thing about these strategies is you have to have the patience to trade them, because the market can print you false patterns, The market will throw out these false patterns, and sometimes you'll get this left shoulder, this head, this right shoulder will start to form, and then you will jump in saying, hey, I have a guaranteed head and shoulders pattern. And instead of the market pulling down to this support, the market will hit this previous support to the left and then shoot up to the upside. And that right shoulder has never completely formed. So in this pattern, you want these left shoulder, the head, and the right shoulder to completely form. Then you want the market to come down and break a support level. Usually, once it comes down to a support level, it would rally again to the upside a little bit, break this level, which it did here, have a minor pullback or pullback all the way into that level, which this pullback came down to this resistance area here that was previous to the left. Once the market did finally break this support here, the market pulled back, came back down. Here's where your retest to this support level that has turned into resistance, and then found your entry here, and the market pulled down into a nice sell. You took profits here. If we mark that off the charts and went back to the left, I'm sure you'll have a support area there, but I won't do that now because I have other patterns marked out, and I don't want to mess those up by putting a support level there. So again, how you trade this, you let this pattern present itself, then you let the pattern come all the way back down to the support level that it's been testing to make this head and shoulders pattern. Once the level is broken here, wait for the pullback to retest structure to the upside. Once the market bounces off of that structure and breaks again below the support, you want to again wait for another pullback to rally into this previous support that the market has now made, which was a new low under this support here. You want the market to rally back up and retest that, and then give you a nice bounce off of that to create another low, this is where you would have took your sell, and you had a nice momentum to the downside, and you took profits here. So that is a head and shoulders pattern. They're easy to recognize. Again, you have to be patient, wait till the pattern completely forms, wait for support to be broken, find that pullback at support. Once it creates a new low, find that pullback into previous market structure. Now that old support has turned into resistance, and the pullback and break of that new structure is your entry point. Go over to the left. You have a double bottom here. How you trade this, the market has pulled up into a resistance area. The market has came down, tapped the support, broke through it, rallied back up, made a resistance area, tapped the market here, pulled up into a resistance area, tapped for your double tap or your W. You look here, you can see a W. Then the market rallies to the upside, and you took your profits here. The best way to trade this is right here. And the market has formed this W here, this area here. This entire area here, but you can see the little wave on the W. This area here is called a neckline. So you want the market to bottom out, make a double bottom, push through your neckline. The market then pulls up, gave you a retest to previous levels here, previous market structure. Then the market push back through and rally to the upside. And you would have took your profits here at the top of the structure, which is also the top of this level here. So you want to be patient and let the market push through this neckline before you try to find an entry. Once the market pushes through that neckline, then you wait for the market to give you a retest into previous structure. Once that structure is broken again, you can enter the trade. You check your profits at the top of this original structure. Here in the market, you have an inverted head and shoulders pattern where the market just prints the head and shoulder pattern upside down. Again, here you have left shoulder, you have the head, the right shoulder, and you trade this the exact same way as you would trade a head and shoulders, but in the reverse. The market prints the left shoulder, forms the head, makes the right shoulder, breaks through structure, have a pullback here to this level. Once this level is broken again, you have a rally to the upside. And then here you have a double top or M pattern. Market pulls up to this level, hits support, pulls up to this level again, and again you will use this support area as a neckline. When the market breaks through that level, that will sell and take profit down here to the bottom. Every time you use these patterns, they don't give you huge sales or huge buys to the upside, but as you can see, they work perfectly. So you can find these on your charts, map them out, wait till them to complete themselves, and then find an entry when the market structure is broke on these patterns. So this just was a quick video on a few market patterns that I like to trade. Again, you need to study these patterns, focus on being patient to wait till the patterns to form, and then find good entries once the rules of these patterns present themselves. Thank you for watching. Happy trading.